Hey, hello folks. Welcome to Pro Trader Strategies. We are an educational company, and what we're here to do is really talk about trading and the markets. Well, we're going to do all of that. Let me get a couple of things out of the way real quick before I go. Hit that subscribe button so you guys get notifications when we're going live. I do live trading sessions, so throughout the day when I'm doing a live trade, I might pop on at any given time that's unannounced, so that will give you a notification to click on and check out what we're talking about. Finally, comment over there at the side throughout this video or even afterwards. If you're watching it on tape delay, I will circle back around to make sure you guys are all clear concept. If you have any questions, comments, or anything else that you'd like to see and or discussed in these videos, I'll be happy to look into that as well. And finally, smash that like button. It really does help us out. All right, so in this video, usually talking about economic data. Well, it's a Monday, so we don't have a whole lot of economic data today, but we do have a whole lot to talk about. Something about OPEC finally coming through with a result. Remember OPEC Plus, we were talking about the discussions were breaking down here and there. We were all expecting an increase in oil production from some of the major oil producers in OPEC Plus. Russia, Iraq, Saudi Arabia, and maybe somebody else got that increased production quota going on, but they haven't announced when that's actually going to happen. That hasn't stopped the slide here in crude oil. As we can see, if I can share my screen, that crude oil really having a rough day today. And we talked about this last week. We were seeing a lot of these oil stocks see some weakness. Well, oil and tech, but oil as we're talking about it in particular today. And a lot of those markets were really falling out of bed. I'm seeing a lot of the individual stocks and some of the ETFs signal a bit of a bottom. So we're seeing this flush out to the downside and a lot of other aspects of technical analysis giving us some information that these markets might be a little bit overdone to the downside. Something else to note in some of these reports we've been seeing, especially in earnings. Earnings season's been pretty good, folks, but what are we seeing after that earnings is a bit of a sell-off. The expectations were much higher than what we are actually getting. So even though, yeah, a lot of these analysts are coming out with, hey, they're going to make $1 earnings, and all of a sudden the street is expecting more than that, okay? So even though we're getting some analyst readings, it seems as though the expectation is it should be a little bit higher. Getting a little bit sidebarred here, but Tesco is Tractor Supply Company. And what they do is, you know, I'm a grain trader from back in the day, folks. And so we used to really watch Tractor Supply Company because it just seemed like it was a great gauge for what was going on in the economy. Well, we saw Tractor Supply Company do very well on their earnings, beat on the streets. But something that we've noticed with Tractor Supply Company is they are usually in the teens on forward earnings. So like say 18, 19s-ish, maybe up into the 20s. Well, they've got 24 times forward earnings, which is really frothy for something like this. So that's what I'm talking about with these expectations is they're already pretty much baked in, and to the point of they're baked in almost even a little bit more. We could even look at something like AutoNation, where AutoNation's AN, I think, doing very well. Now, we talked about this last year, right? We were expecting this, that people were going to drive in Ubers and Lyfts, much less flying on airplanes. They were going out, and I said if people like to travel and they were flying on airplanes, those are the folks that might very well be the ones that are getting travel trailers, fifth wheels, and RVs, okay? Something to go out camping. They still want to travel, but they're going to take their staycation with, or their vacation accommodations with them, all right? So seeing that move. Now, something with AutoNation is they've seen since last year this time, year over year, a 54% increase in used car sales. Okay, that's from last year. That's since that pandemic. It's continued is what I'm saying. We didn't just see a small blip in a few people going out and buying cars or even used cars because they don't want to take the Uber, the Lyft. They want that all of a sudden that car in the driveway so that they can have that freedom to go and do what they want. So that's been really driving AutoNation and some of the other car makers as well. Now, we were also talking about airlines last week. They were really seeing some weakness. We've seen Boeing cut back on some of their production, mostly due to the FAA, but that also was due to the fact that we were seeing a lot of these airlines really not do as well coming out of this pandemic, going into the roaring 20s as the automakers are. It seems people are leaving and going to the autos. Well, we're getting a lot of signals today in the airlines that looks like a bottom. Here we have UAL, American Airlines, we can look at bottoming pattern, LUV. You've seen me talk about these in the webinars. These are quintessential moves. We've got gaps here. We've got a bottom pattern forming. Now, I'm not jumping on this trade on all of these right now. We've got the charts for the setup. I'm waiting for a confirmation here because what we see sometimes with these gap downs is we could see another stroke lower, but I'm waiting for a confirmation in all of these to the upside. I'm not loving the airlines right now, but on a technical setup with a confirmation across the board in these names, that's something that's going to spark my interest, and I'll be looking at opportunities there as well. Gold futures are moving. We got the bonds here. Bonds moving higher today above the 50-day simple moving average. That 160 handle sure to hold on right now. Lower interest rates. We're seeing the 10-year really dip. 30-year at lowest levels we've seen in several months. So interest rates, like I've talked about, in this 160 handle, somewhere in and around that is where I believe we are going to kind of settle down here, because I don't think that we are really going to see interest rates rise anytime in the near future. We're still seeing asset purchases from the Fed. And remember, asset purchases means they are buying bonds. And when you buy bonds and that price goes higher, interest rates are inversely correlated and they go down. All right. So that's what we're looking at in that situation. Hey, gold futures broke out of that 18 handle earlier on today. We're getting a bit of a recovery in the face of strength in the dollar, but gold futures, I talked about this, that 1800 handle right now, if we're fearing inflation, that is going to hold on to that 18 handle. Why? Because it's a psychological number, not because it's correlated to inflation by an interest rate versus price like we see over there in the bonds. It really has to do with the levers and pulleys of the economy as flight to quality, in a sense, with different assets. And gold, obviously, one of the quintessential assets that is quality over just a fugazi like Dogecoin, if you will. Notice I didn't say Bitcoin or Ether, because there is a value in those. And I've talked about that in the past, where there is a limited supply of those assets, whereas Dogecoin, they can print as many as they want. It's clearly, I would say it's not even an ETF. It is an NFT, or it's not even a crypto. It is an NFT. All right. VIX making that spike. Why? Because equities were falling out of bed earlier today. We've got the NASDAQ down over 120 points, really dropping. Now, remember, I was talking about some of the major names in the NASDAQ were really what was driving this to the all-time highs, while we were seeing 50% of these names break below the 50-day simple moving average, which is really kind of bizarre to think that there is a weighting in this index that allows it to continue to move when only maybe 5 or 6 of those stocks are driving this to the upside and the rest of the broader markets are coming off. So NASDAQ starting to catch up because those names we've been talking about were losing momentum last week. We're talking like Amazon, some of the FANGs, Facebook facing some headwinds right now with Biden calling them killers or something like that crazy this weekend. But NASDAQ off the lows, though, we're seeing some real strength there late in the day, as I think some of those earlier names that we were seeing lead the charge to the downside are reverting back to the upside. And then those major names that was holding up the NASDAQ is a fight to the downside. So it's really struggling between the broader NASDAQ names kind of making a move to the upside, and some of these heavier weighted names in the NASDAQ are losing some steam here. Look at the Dow Jones Industrial Average down 740 points, 138 Fibonacci not held at all, and the market really starting to slide. Now, these are some of those blue chip stocks that we've been talking about. We can flip back over to like some other names like IBM. Those are going to start looking to roll over there. IBM is in the Dow Jones, and we've talked about this IBM trade for quite some time. It might look like we are breaking back down into our neutral support and resistance areas. It's breaking down to what was the resistance and is now acting as a support. So if IBM breaks down into that channel again, opportunity for downside there in that trade, because we'll be getting back down into that channel again. All right, E-mini S&Ps, they are off on the day. When you see this chart, it does not look good. Continuing the weakness from Friday overnight. Maybe got a dead cat bounce is what I'm talking about here. You get a dead cat bounce and boom, the market just free falling out of bed. Now, having said that, across the board, I'm looking at this week being more of a turn around, turn those hands around. That's what we used to say on the floor. That's kind of where that whole saying used to come from, is when you are seeing selling on Tuesday. There was a guy on our floor. He was like the Weird Al Yankovic of singing songs when things would happen. And his whole thing was on Tuesdays, turn those hands around, and follows that song, and literally had the lyrics to a financial theme, if you will, but turning those hands around for the buy. So what I'm saying here is equities to the upside is what I'm seeing. The last couple of weeks I've been doing bull and bears, like these chart setups. Most of them are bottoming patterns where we're getting hangman dojis, spinning top dojis, all of those types of candles that signal a reversal of momentum. And we're starting to see those show up in a lot of the names that we're seeing some weakness across the board. NVIDIA, a retracement here, almost a complete engulfing green pattern here on this setup that we've had. I didn't mean to do that. Sorry, folks. I wanted to, this is not going to be easy, is it? Not going to make it easy for me. It might be easier just to say NVIDIA and type it back in again, or just say BB. Confuse the system to opt me back. All right, there we go. So what I want to get at is this right here. We got this on an engulfing red pattern, right? That was the signal for the short here in NVIDIA, and we took on that trade, and you've seen me scale out of this. Now I have 1/3 of them left on. I've scaled out of most of them. I was looking for the 715 trade. I've been talking about that consistently this week. Well, we saw the weakness right off the bat, and I kind of started thinking we were going to come back down and test that 700 handle, all right, which is lining up with that 50-day simple moving average. I thought we might come down and bounce off of that to find that support, but we really started turning around immediately off the open, and you'll see that I did not have much opportunity to get out of this trade. The low happened in the overnight session, opening up just almost no red down ticks in this trade. So I started getting in there trying to buy this synthetic short back. If you guys remember, I'm synthetically short at 824.20, right around there, and the market has sold off. I covered them at a price of what was it, 775, 750, and then I was looking at covering it when it was trading at around 715. Now, I put my trade in there to buy them back, and the market started rallying. So I have rolled this trade up, chasing it, but I finally stopped at trying to get out around 700. And what is my price on that? 700 and like $45. So I'm getting really close with this pullback here. So with that said, if you guys remember, I put on the September, and I bought the 830 puts, sold the 830 calls in there, and I originally did it for $5.80. So that's why I'm talking about my break even. You subtract that $5.80 from the 830. That puts me at about 824.20. That's my break even. And then scaled out of some of these buys as we've gone down. Now with this bounce today, I want to cover the last of the trade in NVIDIA. So probably going to be pulling this ripcord today. Even if we finish down near these lows of the day, that candle will look like a setup for a reversal. If it finishes right here, it looks like it's an engulfing pattern that we would have been talking about for the bearish moves in the past couple of weeks. We've been looking for these types of green and then red, the counter opposing, right? Well, we're getting that to the other side. That is a very bullish momentum shift there. Even if we sold off near the lows of the day, like I'm saying, that candle would look very much like a bullish candle for a reversal. And in this case, it would look more like a spinning top doji, if you will, or something along those lines. Sorry, looking for my pin here that I want to pull up to see if I can, is it there? There we go. I just want to do a little inking here if you give me a minute. But again, actually, I want to go with the green here. So this candle is the one in particular that we're looking for. And we've gotten this bearish move off of this candle. Boom, boom. And markets bounced off of this support area that I've been looking for. Now, this candle is engulfing, all right? Even if it were to kind of finish out right here, right? That candle would then look more like this. And that is those kind of candles we've been talking about and confirmation. This is what I'm waiting for most of these trades, is that confirmation. Well, today, I think that for a trade to get out of, there is some strength in here I'm not going to mess with and look to cover this trade sometime today, most likely. All right, and then BB, BlackBerry, folks, I put this trade on for a swing trade, and it just didn't work out. It wasn't even a swing trade setup. It was more along the lines of my buddies talking about unusual option activity. You know who those friends are. Well, I've decided to cover a couple of these, the last few, just to go back, get some data on this, see if this is really a thing. You know, I was back in the day trading those and haven't in a long time. Why? Because I did not find that they were very consistent. Not consistent enough, more consistent than flipping a coin, let's say. At least the ones that I've picked, I should say. I don't want to bash on all of them, but it seems like the few that I've been picking lately have not had that move. Anyway, so BlackBerry was the trade that I just let expire worthless here. And I had done the July that expired on Friday, bought the 14 calls in there for $1.51, and obviously directional move, theta decay, all of those things had that trade not work out very well whatsoever. So that one is a loser. And now I want to check out a couple of these ones that we were talking about. XOP. Bottoming pattern here. This one maybe not as great of a bottoming pattern as something like ConocoPhillips that we're getting there. Keep an eye on. Like I said, we've gotten this drop. The candles are looking pretty good right now for a bullish move here, but I'm waiting for confirmation on all these. It's been the first drop, so sometimes we get another leg down before we start seeing that real support level. You know, sometimes the second day is when the weaker hands come in and start dumping out on those. But that's looking bullish there. We've got UAL, American Airlines, Southwest Airlines, Las Vegas, Love, finding those bottoming patterns in the airlines. Now, they've had some weakness. I've been talking about being short these for quite some time. It might be a good opportunity to look for a reversal here, all right? So I'm waiting for a confirmation. Again, we have seen this weakness. The charts are looking pretty positive, but I'm waiting for the full-on confirmation in most of these. We could even look at Twitter, was looking like it was finding a little bit of a bottom here. Amazon, these were some of the names that were showing some support here at these levels. So I think that, yeah, the NASDAQ, getting sucked down a little bit here, but I think some of these major names that we've been seeing some weakness in are going to be some support here. But if If you want to look at some of the major indices, the reason why I say I think the risk is to the upside in equities, despite the fact that we're seeing this real weakness here today, I think that turnaround Tuesday, tomorrow, could come in full swing. We've gotten a nice big drop off. We've seen some weak hands shutter. Now the strength should be coming back around, and we'll get that fear of missing out trade because some of those people will have dumped too early and start buying back into this. I think that for the most part, this correction is over for at least the near term because of these showing some strength. Something with SPY that I want to show you on my charts here. We've been watching this trend channel for quite some time. It came down and picked off on this 50-day simple moving average, and we've got this trend channel that has been very solid. Again, wanting to wait for a confirmation, get back into that trend channel and opportunities for the upside. So a lot of the equities are showing some strength, despite the fact that it feels very heavy today. Tomorrow, I believe, is a turnaround Tuesday, so I think risk for equities is to the upside. We've showed some of these major names that have been weakened over the last couple of weeks, especially energy stocks. You've heard me talking about being bearish around that. I would say it is time to start getting a little bit more defensive, maybe cover some of the trades if you've done multiple tranches, meaning you have the opportunity to scale out of some of these. That would be something I would be considering today if I were going to be a mentor for you. And if you do want a mentor, make sure you hit that subscribe button because we will give you some offers where, yes, I do have opportunities sometime available as a mentor, but we need to wait for some of those time slots to open up. Right now we're booked, but try and make it for you. If you comment over on the side though, right now, here in the now, I'll try and make sure you guys are clear of concept. Like I said, I will circle back around for you folks to chat you all up. And comment, if you have any questions, comments, or anything else you want me to talk about, throw it over there in that comment section. I'd love to hear from you folks and hear what you guys like to talk about, all right? So upside risk in equities, despite the fact that we're seeing some weakness here, it could be an opportunity to add some positive deltas. Like I said, Amazon looks pretty good. Apache, Intel, NVDA. I mean, it's abound. And then if you want energy, we got XOP showing about them, Devon Energy, so even some cheaper names there. So opportunities to take advantage of bullish moves on some of these stocks that we have profited on the downside. Time to turn those hands around. All right, that's all I got for you guys. Like I said, subscribe, comment, and if you can't hit that, take that. All right, bye for now and take it easy.